Hi guys, and welcome back to my channel Pips and Profit. And in today's video we're going to be discussing forex trading for every beginner part 2. And today we are discussing currency pairs. I hope you're excited about that. We're discussing currency pairs today. All right, so quick to the main content for today. What is a currency pair? Right now, a currency pair represents the quotation of two different currencies, showcasing their relevant value against each other in foreign exchange market. Okay, so that is basically what a currency pair is. All right, we have two different currencies. We have, for instance, the euro, we have the dollar. When we pair them against each other, we want to find out the value, all right, the relative value of these two currencies against each other in the currency market. And like I explained in the last video, forex trading, which is forex exchange trading, we are trying to take advantage of the fluctuations of the prices of two currencies. So when a currency is paired against another, we want to take advantage of the fluctuation in the price because they are all priced based on their value. All right, if this is getting a little confusing, hold on until the end of this video. You're going to understand it better. All right, now what is the arrangement of a currency pair? A currency pair is arranged side by side, having one as the base currency and another as the quote currency. Okay, when a currency pair is arranged, it's arranged side by side, and the one on the left hand side is called the base currency. The one on the right hand side is called the quote currency. Like you can see in the image below, we have a base currency, we have a quote currency, and we're using euro and the US dollar as one of the most popular currencies. We're using them for our example today. So the euro on the left hand side is called the base currency. The dollar on the right hand side is called the quote currency. If we switch it, the dollar is going to become the base currency if the dollar is on the left hand side, and the euro is going to become the quote currency if it's on the right hand side. Okay, now what a base currency simply means, like I said earlier, is the currency on the left hand side denoting the unit you are buying or selling. It denotes the unit you are buying or selling. I'm going to explain that. And on the other side, we have the quote currency, and in this case, we have US dollars as our quote currency, and it's the second currency in the pair, and it is showing the value relative to the base currency. I'm going to explain that in the next slide. Okay, so just know this: when you have a currency pair, the one on the left hand side is called the base currency, the one on the right hand side is called the quote currency. Right now, how are these currencies priced? How are they priced? For instance, if you open a market or if you open a chart, a forex chart, and you see a base currency and a quote currency, or maybe you see euro USD market chart or euro USD forex chart, and you're seeing a price attached to it. For instance, we're using the price 1.09 1.09409 1.09409, which is the current price as at 2024 when this video was recorded. All right, so we have that as the price of euro USD as a currency pair. Now what this means is that 1 euro is equal to $1.09409 US dollars. 1 euro is equals to 1.09409 US dollar. That is what it means. So if we have, for instance, the euro USD pair, and the price is at maybe 4, the price is just 4, there is no unit attached to it, let's just call it 4. All right, if the price of euro USD is 4, what it means is that 1 euro USD is equals to 4 US dollar. Okay, if the price goes to maybe euro USD, the price is 1, that is called parity. I'm going to explain that later in another video. If the price is equals to 1, the price of euro USD is equals to 1, it means 1 euro USD is equals to 1 US dollar. That is how currency pairs are priced. So if you look at any forex chart, usually on the left hand side, all right, the left hand side of the forex chart, sorry, the right hand side, I beg your pardon. On the right hand side of every forex chart, we have the price. All right, and on the bottom side, I'm going to also explain that in another video. We're going to look at every forex chart properly and explain what everything means. All right, but on the right hand side we have the price, and on the bottom side we have the time. So for that pricing, what it means is that one of the base currency is equals to the current price of the goods currency. So if we have Euro USD or even GBP USD, and the price is reading 1.2 or the price is reading 140, what it means is that 1 GBP is equals to 140 Euro USD. All right, that is the interpretation in the foreign exchange market. 1 Euro USD in this scenario is equals to 1.09409. All right, I hope you're understanding what it means now, right? So you may not get the hang of it completely. You can rewatch the videos and understand it, or you can watch through the series and finish it up. By the ending of the series, of this beginner series, you would probably, I'm promising you that by the end of this video series, you would understand all these things accordingly. Okay, so that is that for the pricing of currency pairs. Now we have different types of currency pairs. We have about 5 major types of currency pairs. We have what we call the major currency pairs, and these are the most traded currency pairs by globally recognized currencies, okay, or globally recognized countries. We have big currencies because they are currency pairs that are mostly respected and recognized by other currencies or other countries. All right, so major currency pairs are the US dollar, major currencies rather, are the US dollar, the Japanese yen, which is the JPY, the Great British Pound, which is the GBP, the Euro, which is EUR, we have the Swedish franc, which is CHF, and some others, okay? But when we're looking at them as a pair, we are pairing these major currencies against one another, so we call them the major pairs because they are most traded and globally recognized by every country and every trader. So we have the Euro USD, we have the USD JPY, we have the GBP USD, we have the USD CHF. These are major currency pairs. And on the other side of major currency pairs, we have minor currency pairs. And because the dollar is like a benchmark currency in the forex market, every other pair that does not include the dollar is called a minor pair. Every pair that does not include the dollar is called a minor pair. All right, so we have pairs like the Euro GBP, which is Euro against Great British Pound. We have the Euro AUD, which is the Euro against the Australian dollar. We have GBP JPY, which is the Great British Pound against Japanese yen. We have also the Euro JPY, which is Euro against the Japanese yen, and so many others. So anyone that don't include the US dollar is called a minor pair. We also have what we call exotic pair. We have exotic pairs. And these currency pairs are from developing or smaller currencies, or smaller economies rather. They are from developing or smaller economies. For instance, we have the we have the USD SGD, which is the Singaporean dollar. We have the USD HKD, which is the US dollar against Hong Kong dollar. Okay, when we have currency pairs like the US paired against smaller currencies, or currencies from smaller economies like the Singapore, we have the Hong Kong and the likes of it, we call them exotic pair. We also have what we call regional pairs, which are currencies from region like the Scandinavian currencies, which is, for instance, we have the Norwegian krone, we have the Swedish krone, right? So when we have the euro, for instance, which is a major pair or a major currency, paired against Scandinavian or an emerging market like the Swedish krona, we have the Norwegian krone, then we call that a regional pair. We also have USD ZAR, which is a South African rand. We have several others, USD NOK, which is the USD against the Norwegian krone. These are called regional pairs. When a major currency is traded against an emerging market, it's called a regional pair. We can mistake the regional pairs for exotic pairs. Nevertheless, the goal is to make profits off this, all right? And finally, we have the precious metal pairs. These are not currencies in many cases. This is when a currency is paired against a precious metal. When a currency is paired against a precious metal to determine its foreign exchange price, we call that a precious metal pair. All right, and the examples that we have is gold paired against the dollar, we have silver paired against the dollar, we have copper, we have titanium paired against the dollar, we have aluminum paired against the dollar. Any precious metal that are used for whether for jewelry, for productions, for industries, whenever they are paired against the dollar or against any currency, we call it the precious metal pairs. I hope this was helpful. I hope by now you've understood what currency pairs means. If this was helpful, as usual, click on the like button and comment your questions. I will definitely attempt to answer every question you have. All right. Thank you and see you in the next video. Make sure you share this video with your friends so that they can also take advantage of it. All right. Cheers and see you in the next video.